assuming the worst may be one of the consumer's biggest hindrances to getting financing for a car at a good interest rate. For some people who believe their credit is poor but have never looked at their own credit scores or credit report, their efforts to get auto financing with bad credit may be taking them down a far more costly road than they should be traveling. It is, therefore, in the best interest of the consumer to find out where he or she stands in the credit purchase world. Not knowing can cost a consumer hundreds of dollars, especially where such a large purchase, such as a vehicle, is involved. The cost of knowing is not a large one. In fact, an individual's credit report is available for free from any of the 3 credit reporting bureaus, Experian, TransUnion, and Equifax, as well as from annualcreditreport.com and freecreditreport.com. There are alternate sources where one can obtain a credit record. However, consumers must remember that their credit reports are usually free, and any company offering to deliver one for a fee is doing so illegally. According to the Federal Trade Commission, the Fair Credit Reporting Act requires each of the nationwide consumer reporting companies, Equifax, Experian, and TransUnion, to provide you with a free copy of your credit report at your request once every 12 months. With no excuse to avoid finding out where one stands, it's time for the individual to take a hard look at the contents of that report. Is everything accurate? If there are questionable entries in the credit report, question them. This document is not infallible and can be subject to dispute and correction. Verifying that all the information is accurate and all mistakes have been corrected can put the customer into the next higher credit rating bracket. When translated to auto financing, a car shopper with bad credit might find that his or her credit is actually average to good, which in turn means a substantially lower interest rate on that loan, resulting in hundreds of dollars in savings, even thousands. A lender can say a person's credit rating is the benchmark that determines his or her creditworthiness when it comes to applying for auto financing. To the consumer, this means how much interest they'll pay over the life of the loan. Simply because one lender identifies a borrower as having bad credit doesn't make it so. Again, returning to the credit report and credit scores, there may be room for varying interpretations of those credit score numbers. For someone teetering on the edge of average and bad credit, one lender may see the borrower as a perfectly acceptable risk and charge non-prime interest rates, while another will see that same borrower as a high risk and charge a subprime lending rate for that same auto financing. While credit scores are standards, how they are seen by different lenders can have dramatic changes. That's why in the modern car marketplace, it becomes necessary, even desirable, to shop for auto financing in the same manner as one would shop for a car. After gathering up credit scores and an annual credit report, a prospective car buyer may have confirmation that he or she will actually have to get auto financing with bad credit. This is not the end of the world, since bad credit is a relative term. Different lenders have different standards for auto financing, and a score above 600 may still allow for favorable loan options to the borrower if a few figure into a credit score. A lender has to examine the amount of money an applicant brings in each month, the amount of money that applicant pays out to other creditors, and how promptly he or she pays those outstanding debts. Compared to a credit score and the details in a credit report, an auto financing applicant can find him or herself negotiating for interest rates close to those for someone with good credit. Information is essential to negotiating from a position of strength, even when it comes to getting auto financing for bad credit, for the simple reasons that having to pay higher interest rates does not mean paying the higher interest rates. When the consumer knows where he or she stands, an informed decision can be made as to what sort of financing is within the realm of reality. No matter what the credit health of the borrower, there's always room for negotiation, as it's in the best interest of both lender and borrower that they reach an auto financing agreement that can be paid back in a reasonable amount of time. Both sides win when the borrower becomes an owner. Federal Auto Loan. Good credit, bad credit, no credit, all good.